Hi, welcome to Chapter 10. Chapter 10 is going to talk about payroll taxes. For those of you who have done payroll in other places professionally, you know that the payroll taxes change on an annual basis. And there's quite a few things to know, but you don't have to remember everything. As I usually say to people when I teach them about tax, the key to being able to do taxes is not so much knowing everything, but knowing where to find everything and find it quickly. All federal forms such as 941 assume the first quarter. So when you're doing 941s, 941 assumes it starts at the beginning of the year, January 1st. There is supplemental information regarding the impact of the legislation that changed the W-4, but that we're not going to look at that right now. Withholding taxes, we all know what those are. Withholding taxes are imposed on taxpayers to help fund government operations using a pay-as-you-go system. And we have, as we've talked about in a prior chapter, we have a progressive tax system. So the more you make, the more you pay. At the end of the year, the employer is required to summarize an employee's earnings and taxes withheld on a Form W-2. So what happens here is the company reports to the IRS, here's how much I paid this person in 2021. Goes on the W-2. The W-2 is filed by, one copy of the W-2 is filed by the employer with the IRS. You get the other one. So what's going to happen here is the government gets the W-2, and then they're going to match that W-2 to your 1040 that you file with as your tax return and make sure that the earnings match. Form 1040 compares tax liability with tax payments. The payroll tax withholding system was established to produce a stream of revenue for government operations. Of course, it's the way it's government revenue. This is the way the government pays the bills. Forms W-2 and 1040 are forms used to match tax liability. Again, we just talked about that. That's true as well. Withholding taxes are an approximation of the proportionate share of total tax liability the employee will owe to the federal government. So essentially what you're doing with the withholding taxes on the employee's paycheck every payroll is an estimate of what they think they're going to owe at the end of the year. Is that going to match what's on their tax return? Remains to be seen. It used to be years ago, there was a joke that when you did your W-4, you took as many allowances as you possibly could so you could reduce the amount of tax that was taken out of your paycheck. The problem was that when you took 10 or 12 allowances and you only had 2 kids and a wife, then when you got to do your tax return, you grossly underpaid your taxes, and the government takes care of that problem. There is a new revised W-4 form for 2020. The form itself, the W-4 form, for those of you who have filled out a W-4 before 2020, the Form W-4 changed a whole lot. It was redesigned. It has a more clear and concise instructions on how to calculate your allowances. New Pub 15T. 15T has the withholding tables. The ones used in this chapter are Table 1, the percentage method tables for automated payroll systems, Table 2, the wage bracket method tables, and Table 4, the percentage method tables. And we're going to look at each one of those. The vast majority of folks, though, are going to use the wage bracket method because the wage bracket is really designed for under $100,000 in taxable income. FICA. FICA, the Federal Insurance Contributions Act. Old age survivors and disability insurance, formerly known as Social Security, is 6.2% of the gross, up to a maximum in 2021 of 142.8. The problem with, and I could go on for an hour on Social Security, but the bottom line is Social Security started in 1937. There were 14 people contributing for every one person who was getting benefits, and the average The average lifespan of an American male in 1937 was 62. So if you couldn't collect Social Security until 65, and most people were dying at 62, that meant that the government wasn't paying a whole lot of Social Security out. The average age of an American male now, average lifespan, is somewhere 72, 75. So not only are people making it to 65, but they're making it past. So and there are only three people, I believe, at this point, contributing for every one person who takes out. Again, because there are so many people getting benefits. So the system needs to be fixed. One of the fixes, short-term fixes that Congress does, is they increase the ceiling at which Social Security taxes are deducted. When I started working, the ceiling was in the 70,000 range, 75,000. Now for 2021, it was 142.8. So they keep raising the ceiling, taking from more and more people. But that's not going to be a fix. Medicare, which is hospital insurance, that's 1.45%, and that has no ceiling. So it's from $1 to the max, to whatever you make. There is a matching tax for FICA on employers. So the employer pays a match of FICA and Medicare for the employee. An additional 0.9% for Medicare is withheld from employees with wages in excess of 200 grand. So what you're actually paying is not 6.2 plus 1.45 or 7.65%. You're paying actually 15.3, 7.65 times 2. Employees are required to report cash tips in excess of $20 to their employer by the 10th of the month after the month in which the employee receives the tips. That's reported on Form 4070. Employers must withhold income tax and FICA on employee tips. Large food and beverage establishments may be required to allocate tips to employees. So if the tipped employees don't report at least 8% of the gross receipts, the employer has to allocate the difference on Form 8027. So this is kind of keeping a balance in honesty, really, of how much in tips are actually being received. Employers are not required to withhold federal taxes on allocated tips. They're reported on W-2, so the employee will be reporting on that. Withholding and other employment taxes are levied only on cash wages and salaries paid to the employees. That's false. The payment may be in cash or other forms of compensation, for example, vacation allowances, bonuses, and taxable fringe benefits. The employer fills out Form W-4 to determine how many allowances the employee is entitled to? No, the employee fills that out. Reza is single and earns $1,200 a week. Using the percentage method for a manual system, that's table 4 in the appendix at the end of the chapter, what is the federal withholding tax for her? Well, she's making $1,200 a week and she's single. So we go to table 4, we find the single table, we find $1,200 a week, and we find that it's calculated by taking a base of $89.76 and then adding the difference between 1,021 and the actual pay and multiplying that times 22%. So we've got 89.76 plus 39.38 for a total of 129.14. Luis earns $146,500 in 2021. How much Social Security tax will be withheld? How much in Medicare? Well, Social Security, the max for 2021 was $142.8. So Luis is going to have to pay the max of $142.8 times 6.2%. That's $88.53.60. And then for Medicare, remember, Medicare has no limit, so it's going to be up the total of $146.5 times 1.45%, or $2,124.25 in Medicare. Form 70 is completed by tipped employees for any and all tips earned. False. It's used to report tips to the employer. Employers must make payroll tax deposits of amounts withheld from employees' wages. This has become, and you can go find tons and tons of articles about employers who withheld who withheld taxes and then use those taxes rather than making payroll tax deposits, use those taxes to keep the companies going, and eventually they get in big trouble. A look-back period determines whether an employer is a monthly or semi-weekly scheduled depositor. So the government wants to get their money fast. 4 quarters starting with July 1st, 2019 to June 30th, 2020 for wages paid in 2021. So that's the look-back period. Monthly, 50,000 or less in tax liability. Semi-weekly is more than 50,000. Semi-weekly deposit schedule. So taxes associated with payrolls paid on a Wednesday. This is where it gets a little complicated. Paid on a Wednesday, Thursday, or Friday are due the following Wednesday. Taxes associated with payrolls paid on Saturday, Sunday, Monday, or Tuesday are due the following Friday. All employers are now required. It used to be voluntary, but EFTPS, the electronic funds transfer, is now mandatory. An employer who accumulates 100,000 or more in taxes on any day during a deposit period has to deposit the tax the next banking day. So we're getting rid of that monthly and semi-weekly and all that. If you're paying big taxes, they want their money fast. The employer becomes a semi-weekly scheduled depositor for the remainder of the calendar year and for the following year. Form 941. 941 is done at the end of the year. It's a reconciliation of the amount of payroll tax liability and the payments made. So here is where the employer is saying, here's what I deposited, here's what I owe. And if there's a difference, you have to make up the difference. It is due by the end of the month following the close of the quarter. The big one is at the end of the year. If there's a tax liability of less than $2,500 at the end of the quarter, that can be paid on the next 941. All new employers must use the semi-weekly scheduled deposit system. False. New employers are considered monthly depositors until it's determined where they're going to fit in. The deposit schedule for an employer is based on the total tax liability that the employer reported on Form 941 during the prior 4 quarters, starting on July 1st. That's true. That's that look-back period. Semi-weekly scheduled depositors remit taxes on the following Wednesday if the payroll is paid on Wednesday, Thursday, or Friday. That is true. The penalty for not paying the appropriate federal taxes on time is based on the total amount of the tax liability. No, it's based on what wasn't paid. Form 941 is prepared by the employer to record federal taxes withheld. This is true. Self-employment taxes. This is something I learned when I first started studying accounting. Self-employment taxes are based on net earnings in excess of $400 generated by a sole proprietor taxpayer. Go back to Chapter 6, Learning Objective 6-7 to get the details on that, but that's where this is stated. For 2021, refer to the revised Schedule SE to determine the AGI deduction for 1040. The self-employed taxpayer is responsible for all parts of FICA. Remember, we talked about the employer and the employee matching payments for FICA and Medicare. Well, 15.3 is 7.65% times 2. Right? That's the Social Security and Medicare deductions. Federal unemployment tax, FUTA. The FUTA tax is 6% unless the employer is making state payments. If the employer is making state unemployment tax payments, then they reduce the 6% by 5.4, and you pay the IRS 0.6%. And remember that 0.6% is not for weight is not for unemployment payments, unemployment benefits. That's simply for paying for administrative costs. Form 940 is filed annually by the employer to report and reconcile FUTA. Household workers, considered employees subject to federal income, FICA, and FUTA if paid wages of $2,300 or more, federal withholding taxes were withheld from these workers, and or wages of at least $1,000 were paid to all household workers combined in any calendar quarter. Schedule H, completed by the employer or taxpayer and submitted with Form 1040. That's for the household workers' payments. So a self-employed taxpayer is treated both as an employee and employer, thus pays a combined total of 15.3%. That's true. We talked about that before. What is the effective tax rate for FUTA? The effective tax rate is 0.6, right? If they're paying into the state programs, they get 5.4% credit. Who can use Schedule H? Individuals who employ household workers and pay wages of $2,300 or more, or who pay $1,000 to all workers combined in any of the prior 2 years. Taxpayers who employ household workers are subject to payroll taxes under what conditions? They paid any one household employee wages of $2,300 or more in 2021. Federal income taxes were withheld from employee wages they have to do, Schedule H, or household wages of at least $1,000 were paid to all household workers combined in any calendar quarter in 2020 or 21, so for the 2 years. Employers report wages earned and taxes withheld to employees on Form W-2. So W-2 at the end of the year that's the employer saying to the IRS, this is how much this person was paid, and these were the taxes that were deducted. W-2s are due to employees by January 31st. And then copy A has to be submitted to the Social Security Administration by January 31st. Form W-3 is a transmittal form on top of the W-2s that summarizes the information. Form W-2C is for corrections. Typically, the IRS uses a C at the end of the form to denote that you're making a correction to a previously submitted form. W-3C accompanies copy A of the W-2C. So again, if you have to do a revised W-2, you're also going to do a revised W-3. The employee uses the information from W-2 to prepare their tax returns. True, we all know that. Where and when must the employer send copy A? Copy A is sent to the Social Security Administration along with the W-3, that's that summary form, by January 31st. Explain the process if an employer must correct an employee's W-2. The answer is an employer must file a Form W-2C that's going to be sent to the employee and the IRS, and a W-3C. That's that summary form on top. What are the maximum penalty amounts per return imposed on a company that prepares incorrect W-2s? Penalties range from $50 per return to $280 per return, with a maximum depending on the size of the business. There's also a penalty of $570 per return for intentional disregard of filing requirements. Supplemental wages, compensation paid in addition to an employee's regular wages. Withholding on supplemental wages can be calculated using one of two methods. Flat tax of 22%. Now this would be like bonuses, right? Year-end bonuses. Combine the supplemental payments with regular wages and calculate the withholding tax. A lot of times what companies will do if they're going to pay an annual bonus, they might split it into two pieces so the employees are paying a smaller tax on it. Generally, an employer or vendor must withhold 24% of certain taxable payments if the payee fails to furnish a correct taxpayer ID number. Payments include interest, dividends, rents, royalties, commissions, all the typical compensation. Form W-9 is prepared by the recipient and given to the requester. Failure to furnish a correct TIN can result again in a $50 penalty, and the penalty for willful neglect in completing form is $500. Form is used to certify the TIN the taxpayer is giving is correct, certify the taxpayer is not subject to backup withholding, and claim exemption from backup withholding if the taxpayer is a U.S. exempt payee. And we always give, or if you work in HR, you're always giving a W-9 to new employees, for example. Form 1040-ES is used when an employee must make tax payments for estimated taxes. If in that previous example where the employees used to put in more, take more allowances on their W-4 than they were eligible for, and they grossly underpaid their taxes, typically this would be the situation for them. They would have to make estimated taxes the following year. We're using a 1040-ES. Estimated payments are required if unpaid tax liability is greater than $1,000, and withholding and credits do not meet certain safe harbor thresholds. Estimated taxes are due on the quarter, right? So April 15th, June 15th, September 15th, and January 15th of the following year. Two methods that are available to calculate the withholding from supplemental payments. Again, method 1A, withhold at a flat rate of 22%. Method 1B, if taxes have already been withheld from regular wages, add the two payments together, calculate the tax as if it was on one payment, and subtract the tax already paid. Method 2, if taxes are not already withheld, then add the two together and calculate the tax and make one payment. Payments subject to backup withholding are withheld at flat tax of 24%. If the payee fails to furnish the payer with a correct TIN, this is true. Form W-9. W-9 documents the taxpayer ID number, either Social Security number, TIN, whatever resident aliens use a TIN. What is the penalty for failing to furnish a correct TIN to a requester? $50 for each failure, unless the failure is due to reasonable cause. And that will take us to the end of Chapter 10. I haven't received many questions, but you have my phone number for text messages. I've been having Zoom meetings with quite a few students, so if you need some help as we get on in the semester, please let me know. Otherwise, have a great week.